We'll be starting the broadcast in just 1 minute. Thank you all for joining us today. Well, good afternoon. Welcome to the webinar on BBB Standards for Charity Accountability, and thank you all so much for joining us today. My name is Luana Lewis, and I am the Senior Vice President for Programs and Services here at the Better Business Bureau. And with me is Heather Leyland, who is our Charity Accountability Program Associate with the Charity Accountability Program here. Okay, slides are not moving, so we're just going to correct that for just 1 second. Good, there we go. So today we have a lot of material to cover, and I'm going to try and be brief, as will Heather. We'll try to leave a little time at the end for your questions. I hope we're all coming through clearly. If you have questions, you can enter them in the chat box in the webinar, just by text. There's no open call questions, and we'll do our best to answer your questions at the end of the webinar. This program is brought to you by the Metro New York BBB's Foundation. The Charity Accountability Reporting Program is the core program of our foundation, which is a charity like yours. In addition to charity accountability, we do other programs, educational programs for charity leaders as well as business leaders and consumers. There are about 58 programs in the BBB system that are doing reporting on charities, and together we put out something like 11,000 BBB charity reports. They're all based on the BBB Standards for Charity Accountability. At the national and international level, the BBB Wise Giving Alliance sets the standards and reports on national or internationally soliciting charities. Right now they have reports on something like 1,300 of them. Our Metro New York BBB is reporting on charities soliciting regionally in our Metro New York area. Right now we have about 801 reports on charities. Why do we do it? It's because we were asked to, and it's actually been going on for quite a while. Charity reporting in the BBB system goes back to the 1920s. Our current standards were formulated starting around 2001 and rolled out in 2003 when a BBB entity merged with what was then known as the National Charities Information Bureau and became the BBB Wise Giving Alliance. A national panel of experts formed the standards. There are 20 of them. And what the standards represent are 20 key practices, good business practices for charities. They cover a variety of areas, including governance and oversight, finances, measuring your effectiveness, meaning, in other words, your impact and effectiveness against your mission, and reporting on that as a matter of board policy, and then how you communicate with donors about how their donation dollars will be used in both fundraising and other communications to the public. Beyond the standards, there are several recommended practices that were formulated by our expert panel. They include diversity and pluralism. It's recommended that you use diversity and pluralism in your operational practices. Of course, we strongly recommend that you adhere to the law, and we would certainly look at our standard number 1 on governance if we discovered a charity was not following the law. And then finally, putting a priority on transparency and ethical behavior in all your operations. We are charities, and we're called on to cleave to a higher standard than even the law or BBB standards hold out for us. So going beyond what is merely required and doing what seems to represent transparency and integrity is what's called for. Our guiding concepts for the standards. First of all, the standards don't result in ratings for charities. This is a common misconception. Instead, what we do is we look to see whether your organization is following the 20 better business practices represented in the standards, and then we report on whether you're meeting each one of them, whether you're following each one of those practices. That's what a BBB report is about. Charities voluntarily disclose information to us, some of which is not public necessarily information, such as audited financial statements prepared according to generally accepted accounting principles, or GAAP, which we prefer to look at for consistency. Throughout our reporting and review process, we look to see accuracy in terms of the way you report, how you're using donor money in your financial statements and other communications, and the accuracy and integrity with which a nonprofit conducts its fundraising solicitations. GAAP-compliant financial statements are our preferred reference. We do look at IRS 990s, but we're looking for consistency. And overall, our view is that accountability involves more than just financials. Who benefits because we do this? Well, donors do, because we can provide them with a free and quick way to check if charities are following all 20 of those better business practices for nonprofits. They can see easily and quickly if a charity is meeting high standards. Of course, for those charities that voluntarily, after meeting all 20 of the standards, choose to license the BBB seal when that appears on a fundraising representation or on a website, donors widely recognize and value that charity trust mark. Charities themselves, how do they benefit? How does it benefit you? Well, for one thing, going through the process can be a helpful way of conducting a checklist, due diligence review of what your organization is doing to manage itself and how it interacts with donors. These are key practices that we believe are helpful and will help make your organization more successful. The review itself is free, and if your organization is found to meet all 20 of the BBB standards, there's no fee also for becoming BBB accredited. You're automatically considered BBB accredited and noted that way on our BBB website. The only time there is a fee is if a nonprofit wants to license our BBB brand, which is our intellectual property, our logo, our seal, our brand, and use that for fundraising or other communications purposes. That privilege is only for charities that are BBB accredited and that have met all of our standards upon review. We'll talk about that at the end of the program, but our main focus here is to ensure you know how to meet all the standards, why it's helpful to you, and how to be BBB accredited. Just a couple of study results to share with you about why we think being BBB accredited as a charity is valuable. We've done several studies working with Professor Greg Chen from the Baruch College School of Public Affairs. There were actually several. The most recent one found that meeting all BBB standards, and we were looking at our own charity data as well as that of the BBB Wise Giving Alliance, meeting all 20 of the standards was associated with higher fundraising revenue. In the Metro New York area, on average, it was about a 13.5% increase in revenue if a charity met all 20. And for nationally or internationally soliciting charities reviewed by the BBB Wise Giving Alliance, about an 8% increase on average. Details of the study are at this website here, and just FYI, we will provide you with a PDF of these slides afterwards, so you don't have to scribble notes about the website references that we're going to give you. You'll get it all after the webinar. We also discovered last year that an independent outfit, Able Altruist, conducted a rather large study of donors involving thousands and thousands of respondents, and among their findings, they revealed that over half of the people they surveyed looked for seals on charity websites, said that a seal greatly or moderately increases their likelihood to give, and we were delighted to find that the BBB accredited charity seal was considered and ranked by these respondents the most likely one to influence the donor's decision to give. And again, here's the complete website reference where you can read the study for yourself. We provide our donor information here in the Metro New York area through a special web page at ny.give.org, which is on the BBB website. You can find a lot of information about what we're talking about today after the program if you'd like to check further, or just contact us and we'll be happy to answer any question you may have. And now, Heather, over to you to talk about the process and our standards.
Great, thank you, Luana. So my name is Heather Leyland, and I'm the Program Manager for the Charity Accountability Program, and I'm going to talk to you a little bit today about the type of charities we're seeking to review, the reporting process, and our standards. Currently, the BBB is seeking to review charities that are at least 3 years older or more, are publicly soliciting donations, and have at least $250,000 in publicly solicited contributions. The reason we have these thresholds is because oftentimes it takes a couple years for a charity to get to the point where they're able to come into compliance with our standards. However, if a charity that qualifies requests a report, we would gladly provide one. It's a completely voluntary process, and we are looking at charities, again, that meet these thresholds. And also, if your organization has been in the news or is of other public interest, that may also prompt us to send you an invitation for review. Currently, our charity reporting process, to begin the process, you would fill out a questionnaire on our website located at the URL at the bottom of the slide. On the second page of the questionnaire, there's a list of supplemental documents that you would submit to us. These include your IRS Form 990, your audited financial statements, privacy policy, and other documents. Once we receive your submission, we will evaluate your organization against the 20 standards and provide to you a draft report detailing our findings. We will then provide a couple of weeks for you to review it, get back to us with any feedback or comments. And in the event that your organization may not be meeting all standards, we'll provide information on how you can meet those standards, and we'll work with you to get you to that point. So it's a process that we work with you, we develop a relationship, and again, we do provide the draft, and once we hear back from you, we would then publish the report on our website. So our first 5 standards of charity accountability have to do with governance. The governance section of the standards seek to ensure that the board provides adequate oversight. Adequate oversight includes, but is not limited to, board approval of the budget, fundraising practices, contracts, and major expenses. The board must also receive copies of the 990 and all fundraising contracts. Accounting procedures must meet generally accepted accounting principles, and regularly scheduled appraisals of the CEO's performance at least every 2 years must be conducted. It's also worth noting that a voting board member should be overseeing the organization's finances. We cannot give legal advice, but in general, conflict of interest policy is required of all charities, and there are new procedures to follow and legal requirements about what elements should be in a conflict of interest policy. So we will, at the end of our presentation, refer you to a link that will take you to the New York State Nonprofit Revitalization Act, which actually spells out those mandates and procedures. The requirements do vary case by case depending on the size of your charity or other circumstances, so you should review this link and the law to understand how to come into compliance with all aspects. Standards 1 and 4 regarding governance, a charity must have a board chair and a treasurer. These are 2 separate rules and cannot be carried out by the same person. In addition, the board chair and the executive director may not be the same person regardless of whether or not they are compensated. If a paid CEO or a senior executive acting as a CEO without such a title serves as a chair of the organization, that could potentially not meet 2 standards for the same reason. It would fail a standard 1 because the chair and the CEO are the same person, and it would fail a standard 4 because the chair is directly compensated as a paid CEO. Our understanding is that effective January 1st of 2016, the New York Nonprofit Revitalization Act may require that the board chair cannot be the CEO, executive director, or any other employee of the nonprofit. Please refer to the Charities Bureau website provided at the end of the presentation for additional information about this. Our Standard 2 requires that the Board of Directors has a minimum of 5 voting members. Standard 3 requires a minimum of 3 evenly spaced meetings per year of the full governing body with a majority in attendance is required. If your organization has 3 meetings or more, if you have more than 3 meetings, we will take the best attendance to determine whether there are at least 50% of members in attendance of your 3 best meetings. Executive committees or any other type of committee meeting do not count, only full board meetings. A conference call can substitute for one in-person meeting. In addition, a video call such as by webcam like Google Hangouts or other means where everyone can both see and hear each other may be counted as a face-to-face meeting. Standard 4 calls for not more than 1 or 10%, whichever is greater, directly or indirectly compensated person may serve as a voting member of the board. When we say directly compensated, this could be anyone who's receiving compensation in any form, such as cash payments or in kind, and might include benefits such as health insurance, for example. Indirectly compensated refers to voting members of the board who are direct family members of direct compensated individuals, including both board and staff members. Standard 5 is our last standard in governance, and it states that no transactions in which any board or staff member have material conflicting interests with the charity resulting from any relationship or business affiliation. Basically what we're looking for here is to make sure that any of these transactions are held at arm's length. An organization should always seek competitive bids and exclude the related party from voting. It's recommended that boards take an active role in determining whether a related party transaction is fair, reasonable, and in the best interest of the organization. New York State law has very specific requirements touching on conflict of interest policy requirements and related party transaction procedures to follow and board member independence. All charities should review these requirements to come into compliance with them. It's important to note that there's also a disclosure question on the IRS full-length 990 as well. So it's increasingly important to avoid anything that might look like a reportable conflict of interest that you'd have to explain on your public tax return. Generally, if a charity conducted substantial transactions with a board member or staff-related firm and took no steps to ensure arm's length, they would not pass the standard. But again, we do look at these things on an individual case basis.
So standards 6 and 7 have to do with an organization looking at its impact against its mission and measuring how effective the organization has been about achieving that mission. Standard 6 calls for your organization to have a board policy of assessing every 2 years how you're doing. What actions are you taking to achieve your mission? Are they effective? What future actions do you need to take to be even more effective? And this needs to be involving identifiable and measurable goals. You need to have a process in place to assess how you're doing against your mission. It's not the same thing as how you're doing with an individual program or how your organization is doing operationally. Although those things may feed into, how you're succeeding with your mission, it's really taking a larger view of what are we doing as a nonprofit, a 501c3, to achieve what we say our mission is. We're not going to judge your process. We're not going to judge the results of your assessment, and we don't even ask to see them. But having a board policy means that the organization has a serious commitment to doing this. Standard 7 calls for the organization to put out a written report for its board to review. We don't ask to see that, but we want evidence that you are in fact doing it. Once every 2 years, again, assessing how we're doing against our mission goals. How can we do better in the future to keep achieving our mission even better? Little known secret, because these two standards are often missed by charities. You may well be doing these steps already in the context of doing strategic planning. So long as your strategic plan actually looks at how you're doing against mission goals, not just operational goals, and makes recommendations for future actions. It's easy to make this adjustment if you're not already doing this, so that you're always looking at your mission and figuring out how well you're doing in relation to that. A few years back, the BBB Wise Giving Alliance collaborated with Independent Sector and GuideStar to create something called Charting Impact. This is an impact reporting tool involving 5 very simple questions. It doesn't take the place of a full-out impact evaluation, but if you fill it out and print out a report, and your board reviews and approves that report that satisfies our standard 7. Now back to you, Heather.
Great. So our financial standards are 8 through 14, and of those standards, only 3 have to do with set target spending ratios. These ratios were determined by a national panel of experts less than 10 years ago. And just a bit of background on that regarding the overhead myth. In June of 2013, the BBB joined forces with GuideStar and Charity Navigator to launch the Overhead Myth campaign at overheadmyth.com. In an open letter to donors of America, we declare that the overhead ratio is not a viable indicator of nonprofit performance. It's not a score and should not be used like one. We ask donors to consider the whole picture. Then, in 2014, we issued a letter to the nonprofits of America asking them to be transparent and honest about the true cost of fulfilling their missions, because it's important to educate funders on the real cost of results. So that being said, by itself, that overhead ratio, again, it's not the only factor that matters. Transparency, governance, leadership, and results are things that should be taken into consideration. Even so, charities need to keep overhead spending at reasonable levels, and that is where these ratios come in. Again, it's important because it matters. Media and government, donor interest, there's increasing scrutiny over the last few years. But on that note, it's good to know that 89% of our Metro New York BBB evaluated charities do meet these program and fundraising ratios. It's not often that they don't, and usually when that happens, it's because of certain circumstances, but for the most part, they're reasonable ratios. So Standard 8 states that program expenses should be at least 65% or more. We determine this ratio by looking at your total program expenses and dividing that by your total expenses. And again, that should be at least 65%. Relatively few charities cannot meet the 65% mark. There is some misunderstanding about what is considered a program expense, and some think the standard forbids allocating any overhead costs to programs, which is not correct. We consider it legitimate to include allocations of expenses such as salaries, rents, and so forth to a program, so long as you can document and substantiate that the proportion attributed to a program is reasonable and appropriate. Our implementation guide online has more information about this and examples. Other expenses belong elsewhere, such as staff time or resources that are used for fundraising. That should be allocated as fundraising. General management should be allocated as administration, such as bookkeeping or premises or equipment maintenance, and things of that nature. We don't offer strict guidelines about what allocations you should use. We simply ask that you do it in a reasonable and transparent way that can be substantiated. Our Standard 9 calls for 35% or less of related contributions to be spent on fundraising. So basically what we're saying here is that for every dollar you raise, it shouldn't cost more than 35 cents to raise that dollar. The way we calculate this ratio is we look at your total fundraising expenses and we divide it by the related contributions. The denominator is the total related contribution generated by fundraising activities. And our next slide shows what items we consider related contributions. These contributions refer to any type of support that could be generated through fundraising activity. And just to note on this list regarding membership dues, they may be considered donations if the member benefits are very minimal or non-existent. And also to note regarding special events revenue, this is an area that definitely needs attention. Amounts attributed to direct donor benefits, such as the meals or entertainment for events, are not considered fundraising expenses. However, other expenses, such as printing, promotion, or design-related items, are related to fundraising efforts connected with the event. Those are considered fundraising expenses. We will ask you to disclose and break out the event's gross revenues, the fundraising costs, and the donor benefit that's excluded from those fundraising expenses if it's not already clear in your financials. It would be unacceptable to report event revenue and net of the cost of the, to report the revenue net of costs and financials in order to create an inaccurate appearance of lower fundraising expenses. Another thing to note regarding these related contributions is government grants and contracts. If your organization receives both of these type of revenue, we would ask that your financials break out the amount for contracts and the amount for grants. And if it's not broken out, we would just ask you for those totals. So valuing your in-kind donations, again, this can be a little bit tricky, and we don't have strict guidelines for how to do this. However, one rule of thumb is, if it's something that you would normally have to pay for, such as a professional service or a specialized skill, then you want to make sure that you're valuing that properly and accurately. And for further guidance on that, you can refer to the document noted on the bottom of the slides, the Statement of Financial Accounting Standards. If you Google ASC 820, it's a very useful document, will come up, and it has a lot of insight and examples as to how one would allocate such, value your in-kind donations. Standard 10 is regarding accumulation of funds and your unrestricted net assets. We state that your unrestricted net assets should not be more than 3 times your last year's expenses or 3 times the size of your current year's budget. When we look at this number, we're not including things like your fixed assets such as land or building, and we're also not looking at your donor restricted funds. Our implementation guide online also has more information about disclosure requirements. If your charity is in fact exceeding this limit, you can still meet the standard. We would just ask that you disclose those unrestricted net assets in your direct mail marketing appeals and on your website so that donors are aware of the situation. This is important because unless otherwise informed, donors expect that their contributions are going to be spent on current programs. So in the nature of full disclosure, and so that donors are not misled, we do have that disclosure requirement. Standard 11 is regarding the availability of your organization's financials. If your organization has at least $500,000 in income per year, a full CPA audit is required that is in compliance with GAAP principles. If your organization is between $250,000 and $500,000, a full CPA review should be provided to the public upon request. And if your organization is less than $250,000, internally prepared statements would be sufficient. For our purposes, when we do see your full CPA audit, we do check the auditor's cover letter, and we are looking for a clean report. The financial statements that we review, we ask you to include the functional expense breakdown according to category by program, fundraising, and administration. If your organization has multiple programs, we would ask you to break out the expense for each program. So this is an example of what the functional expense breakdown would look like. You want to be sure that your charity is not underreporting program expenses or over-reporting them. Your financials are your fundraising representation, and they need to be accurate. Some expenses, often thought of as overhead, may actually be program expenses if you can document and substantiate that this is the case. So for example, you can see here that there's salaries, travel, and postage. There's the amount attributed to both fundraising and admin, and this is a sample of what it could look like. You just want to make sure that it's accurate. You want to be prepared to show that any expenses allocated to programs belong there. This is important because it is a critical management tool for the staff and the board. Again, this is a fundraising document. It tells your financial story to funders and stakeholders, and you want to be sure that it's accurate. It's been in the past that this was only required for health and welfare organizations. It's possible that this could change and be required for all charities in the future, so it's definitely something to get in the habit of doing. Also, your 990 page 10 includes it. Standard 13 is regarding accurately reporting your organization's expenses, including joint cost allocations. Reporting zero fundraising expenses virtually guarantees that this standard would not be met. There really is no organization that does not have some kind of fundraising cost, even if it's relatively small. An example of what could be considered joint costs, some organizations have direct mail appeals that may include activities related to programs, usually in the form of a public service message. This is common. Charities that have such joint cost allocations should be sure that they're appropriate and reasonably proportional, and not try to minimize the fundraising costs by overinflating the amount attributed to programs. A few key points to mention regarding joint cost allocations. You really want to look at your intent and your audience and the content when you're deciding how to allocate these funds. Again, we don't provide guidance or dictate how you do that. We just ask that you make sure it's not exaggerated and that it is appropriate. The ICPA Statement of Position, again, if you Google that, a very useful document that can provide really great guidance in this area. Standard 14 is the budget. It must be board approved. Your budget must also contain the projected expenses, just like in your financial statements, for program, fundraising, and admin. These need to be broken out. They don't have to be extremely detailed. We're not looking to see multiple pages of these minute details, but we do need to see the totals for each of these categories. The next slide shows an example of a budget that would not meet our standards. And if you take a look at this budget, you can see that it doesn't show which portion of these amounts are attributed to programs and which are admin and which are fundraising. So it's, as a management tool, it wouldn't be helpful. There's really no way to gauge where you're at any point in the year. This budget, however, has those totals broken out. It's a great management tool. You can look back and say, you know, this is our fundraising budget, this is our administration budget, and how are we doing? So this is the type of budget we're looking to see. It's simple, not complicated, but the totals are there. The Wallace Foundation, with Fiscal Management Associates, has created a free library of resources and tools to help your organization become fiscally fit. The budget you see here is a free downloadable Excel sheet, so feel free to peruse the website. There's all kinds of tools that can help your organization should you want to take a look.
Okay,
over to you.
Now we're going to talk about the fundraising standards. There are 5 of them that relate to how your nonprofit communicates with the public about solicitations and about what your organization is doing. This is really the heart of why the BBB does charity reporting. Our standards really revolve around the relationship between your organization and the public, and we're looking for accuracy, transparency, and integrity. The Standard 15 really encapsulates what all of these standards are about. It requires that in all your solicitations and communications materials, no matter how you distribute them, and the means keep changing, and getting tinier and tinier in new formats like social media. We're looking for accuracy, full disclosure, truthfulness, so that your solicitations and other communications are never misleading, either in whole or in part. We're not the only ones who are concerned about this. You'll notice if you read the news that often Charities Bureau regulatory activities are directed specifically at things that result in misleading donors. And sometimes even the best intentioned charities do kind of fall off the wagon a little bit with solicitations, maybe because the fundraising folks are not talking to the financial folks or to the attorneys or to your CEO. So it doesn't pay to be siloed in this area. Here's what we're looking for. Full and accurate disclosure at the point of solicitation in written and graphic representations about what your charity is doing with donor dollars. And we know from research that this is what donors really care about. What they're most worried about is that their donations will not be used in the way that they intend. And of course, what regulators care about is whether or not you're accurately representing to the public how their donations will be used. So if you're using impact stories or photos, they need to be from recent events and not things that happened 10 years ago. And all of the statements need to be accurate. Sometimes That might include things you wouldn't necessarily think about. For example, if you're using a stock photo of a child, you wouldn't want to describe that photo as a picture of a client served by your organization, because that wouldn't be factually so. If there are key facts that might influence the donor's decision to give, that they would need to have and really should have before making a donation, they should be disclosed at the point of solicitation. And we would encourage you not to use overhead ratios in fundraising appeals. This goes back to our collaboration with several other parties in the overhead myth. The feeling is that when nonprofits make representations like 100% of your money, your donation is going to be used to support our program, that reinforces for the public the erroneous notion that charities don't need to spend money on either fundraising or administration in order to be effective. We all know that that's not true. Instead, we do need to make investments that way, and we need to be careful about what we say to the public about how the money will be used. If we see a statement like that, we're going to be asking you to demonstrate it. And here's a little mantra about fundraising in general. We say that if you say it, be ready to substantiate it. If you can't substantiate it, don't say it. In the case of the overhead ratio, if you're saying it, then in the same solicitation you need to say why that's true. For example, if 100% of a donation will go to support a program, is that because your board is paying all the costs for fundraising and administration? If that's so, then you need to say it in the solicitation. Again, we're looking for claims about program success to be accuracy and for you to disclose what you're actually doing with the money in an accurate way. Another trigger that will trigger our scrutiny is, if you're claiming zero fundraising expenses, we're going to look at that very closely, particularly if we see a lot of donated income. In most cases, if there's a lot of income from fundraising, we're going to look to see fundraising expenses. Sometimes accountants will say, oh, just put in zero if it's a very small amount. What we will say is, even if it's a very small amount, put in the actual amount, so we'll know that there's an accurate claim being made. Some emerging charities sometimes don't disclose enough about what they're doing with the proposed donation. Sometimes, too, your solicitation can make too narrow a statement about how the funds are going to be used. So if you're doing a really huge solicitation, a big direct mailing, a big event, it may pay to check out your solicitation language to make sure that it's both broad enough to include all of the uses for the donation that you might want it to include, but narrow enough to be specific about what's really going to happen with the donation. All right, standard 16, this is our most missed standard, really surprising, and I think maybe this is a nomenclature issue, just like the effectiveness reporting thing, our standards 6 and 7 might be nomenclature issues. But a lot of nonprofits these days don't have something that they call an annual report. So putting aside the name annual report, what we mean is a document available to anyone on request that includes your organization's mission statement, a summary of your past year's program results, can be really short, the roster of officers and members of your board, and a brief summary of financial information, including the total income for the prior year. Once again, your expenses broken out into program, admin, and fundraising categories. That can just be totals, with your ending net assets. Little known secret. This might be your 990, actually. It's not called an annual report, and it's not particularly donor-friendly, but it can serve as an annual report if all of that information is in it, and if you provide that information, that 990, when someone needs to have an annual report. So I think we've said all this, but just to mention, information that's scattered over your website or that's sent out by emails in terms of brief reports about here's what we're doing, guys. Those kinds of things don't count as annual reports. We're looking ideally for a single document that can be printed and sent upon request. It doesn't have to be glossy or expensive. It doesn't have to be called an annual report. Website disclosures. We are looking for the same kind of disclosures on your website if you are soliciting donations through your website as you would make in an annual report. And that includes things like your mission statement, your board information, and your summary of financial information, your program results. Your mailing address should be on your website so people know you're a real charity with a real location. We look for electronic access to your most recent 990. That can be just a link to GuideStar with an appropriate label, or you can just post it there for download. If your 990 is serving for your annual report, then you've already got it covered. This is if you're soliciting by any means. And there are most charities that we would seek to review here at the Metro New York BBB would have a 990, although we understand that in some cases, say a religious-oriented nonprofit might not. We wouldn't bar doing a charity report on you, but we would need to work with you on that. Standard 18 has to do with privacy concerns of donors. And what we look for is, first of all, that you offer donors an opportunity to opt out of sharing their information or even contacting them at least once a year. And then we want to see a clear and highly visible and accessible privacy policy on your website. That should show it has these 4 components, and all 4 have to be present to meet the standard. What information is being collected and how you're going to use it, how the donor can contact you to review and correct the information, how to tell you that they don't want their personal information shared outside of your organization, and that can just be a checkoff. And very importantly nowadays, what security measures are in place. Just here's an example of an opt-out, just check-off box. And I want to take a moment to step outside our standards for a second to emphasize the importance of data security for nonprofits. This is increasingly an issue for charities who are being hit. We have a number of resources here on this slide, which we'll send you afterwards. The BBB has just launched a 5 steps to cybersecurity resource for businesses. We're doing a program soon for nonprofits, which we'll post online later, and we'll let you know about that when it's up. Take a moment to understand what your security profile looks like and take steps to safeguard your data. It's really important. Now, back to the standards. Cause-related marketing. There are many ways to define cause-related marketing, but what we mean when we talk about it in the standards is when you are doing something that's called in law commercial co-venture. You're partnering with a commercial entity, and a representation is being made to the public that when a consumer purchases a product or a service, that a charity is going to benefit in some way from that commercial transaction. And what we're looking for, again, just as with all solicitations, is full disclosure at the point of solicitation. And here's what we want. We want the who, what, when, where, and how to be revealed to the donor or the purchaser at the moment of purchase and not after, at the very point of solicitation. We're looking for the actual or expected portion of the purchase price that will benefit the charity. It needs to be specific. A percentage or a flat amount would do, but vague phrases such as net proceeds will not meet this standard. And we see that a lot. We see just very vague statements. Oh, if you buy a sweater from such and so boutique, the net proceeds will benefit children. Something just that vague. That will not meet the standard. If your campaign has a time duration, we expect the time parameters to be disclosed at the point of solicitation so the consumer will know whether their purchase will trigger the benefit to the charity. And also, if there are any other limitations, a maximum or minimum guaranteed amount that will be going to the charity as a result of the sale, all of those requirements need to be disclosed. So here's an example that passes the standard. 5 cents will go to ABC Charity for every bottle of juice sold in September 2015, up to a maximum of $500,000. So here you have all the specifics. We know how much from each unit of sale is going to the charity, 5 cents. What charity? ABC Charity, and it should be a real charity. For every bottle of juice sold, and then there's a time frame, September 2015, up to a maximum of $500,000, so we know the limitation to the offer. Just a note here, the offer should be proportional to the number of units made. For example, if you have 100,000 units with this offer on it, but the maximum is reached after 10,000 units are sold, then there are 90,000 units out in the marketplace that are making a material misrepresentation because the donor can't possibly trigger the benefit to the charity by buying that bottle of juice. This has been mentioned actually some years ago by a Charities Bureau chief at one of our programs, so I thought I'd just share that. And we know this is the subject of regulator attention. In fact, a few years ago, the Charities Bureau conducted a sweep of, I believe in this case, it was cancer charities. This is Breast Cancer Protection Month. And they had some regulatory actions connected with it, and at that time, they also published these best practices, which, from their viewpoint, constitute best practices. And they're available online with more detail at this address here, but what they said is it should clearly describe the promotion. Your cause marketing offer should, in other words, give the who, what, when, where, how. Consumers should easily be able to figure out how much of the donation amount, or the purchase amount rather, is going to go to the charity. And we've also heard the Charities Bureau chief say it should be really, really easy for the consumer to trigger the benefit to the charity. Not hard. Don't make them jump through a lot of hoops. If there are limitations, they need to be disclosed. The Charities Bureau has called also, going beyond us, for transparency about this in social media, and then also recommends that the public be told at the end of your campaign how much was raised through this campaign. Our final standard calls on charities to respond promptly if we get consumer complaints and report them to you. Now, what do consumers complain about? Most often they complain to us that I can't get that charity to stop soliciting me. So if you find that someone is trying to reach you, make sure they know how to reach you. I would put it on all your solicitations in case someone wants to opt out to avoid this kind of circumstance, just as a best practice. Always make sure charities know how to reach you to get off your list if they want to. All right, from last year, these are the top 10 most missed standards, so they are ones to pay special attention to for your organization. Once again, number 1 is the annual report. Put the name aside. What we're looking for is a document that functions as your charity's report to donors about how you're using their money. And it's your chance to tell your fundraising case in donor-friendly language as well. So number 2, unfortunately, is the lack of a board-approved budget. That often happens because folks either don't have a functionally allocated or don't have an approved, board-approved budget. Website disclosures, it's kind of the same problem as with the annual report. In terms of board oversight, a common circumstance is that an organization may not be reviewing their CEO every 2 years, and that can, among other things, result in missing that standard. We've talked about the effectiveness standards, how some charities don't realize they may already be doing things that will help meet those standards. With governance meetings, sometimes meetings are taking place in a couple of months of the year instead of throughout the year, or there is a board attendance problem, particularly with large boards. This is something you really want to watch because we are looking for real governance. It is unusual, again, for people to miss our ratio standards for fundraising and program expenses, but they do miss them, and they are in our top 10. And then finally, the privacy policy is often, well, not often, but is missed from time to time. So Heather, you want to take us out, and then we'll take questions.
Great. So you can find all of our BBB standards listed on our website. In addition to our implementation guide, which is a more comprehensive and robust document, it has information on what we're looking for when we're applying the standards, how we apply them, and it's definitely a useful guide to refer to if you need additional information about our standards. In addition, the New York State Attorney General Charities Bureau website is a great resource for your organization. It provides a wealth of information about New York State regulatory information, and it has a lot of guidance for nonprofits, and that is located on the next slide.
It stopped advancing there, so just keep talking, Heather, while I figure it out.
Okay, well, you guys will have access to all these slides. I'm basically just sharing some resources with you. We also have a couple of links to the New York State Nonprofit Revitalization Act. One of those links is the link itself, that is the complete text of the law. And another resource that we like is Baruch College's Resource Center. It's an easily readable format. It has a lot of articles from accountants and attorneys and a lot of relevant updates on developments regarding the law. So that's also a useful resource for your organization. And just to remind, it is completely voluntary and free to go through our review process and to be an accredited charity listed on our website. However, should you choose to, once you become an accredited charity, you are eligible to license our BBB seal. You can use this on your website, on your marketing materials, annual reports. You basically would be able to license our brand and use it on your solicitations. To do that, there is a small sliding scale fee based on the amount of publicly solicited contributions that your organization receives. You can find the complete fee schedule on our website as well. And again, it's completely voluntary to participate in the SEAL program, but it is an option available to our accredited charities. One of the benefits of joining the SEAL Holder program, we do have 4 ads per year that come out in various newspapers. We have 2 come out in the spring, right around tax time, and another that comes out in the fall around Giving Tuesday, and it's basically an ad for donors to see all of our nonprofits that are accredited charities who are licensing the BBB seal. Further, once you license the seal, this is what it could look like. You would have a logo on your website that tells donors you are BBB accredited. It's easily identifiable trademark, so you can link this to your BBB reports. That way donors can confirm and verify your participation in the program.
Indeed, they must be linked to the report. And here's how to contact us. Here's how to contact us, and we welcome your questions about how to meet all of the standards. Heather, do you see any questions? Has anyone submitted questions?
I actually don't see any at the moment. However, if you are typing up your question now, we have a few moments to stay on the line if you would like to ask some questions.
Yeah, we have a few minutes left for anyone who would like to type in a question. In your chat box where it says type message here, I think you can type something and submit it. And we're happy to answer your questions about the standards.
And just to note, we will be sending the slides after, and we'll also have some other links in the follow-up email. So if there's anything not included in that email that you'd like to see, please feel free to reach out to us, and we'll be happy to get back to you.
Okay, well, let me take this moment then to just invite you to communicate with us if you have any questions. And we also encourage you to attend future BBB programs on other issues. We have 2 coming up in the near future. They're on cybersecurity and strategic planning, and we will let you know about those when we follow up with more information about this program. So thank you all very much for attending. Do we have a question? Did something come in?
We do, actually.
All right.
We had a question regarding the seal holder ad and whether there's a sliding scale for that. There's only a sliding scale to license the seal fee. Once you are a seal holder, you will automatically be included in the ads for the entire length of your report term if your report is in good standing. So Typically, a
Exactly.
charity, our reports are good for 2 years. So if a charity licenses the seal fee for the report term of 2 years, you will be included in all ads for those 2 years.
In other words, there's no extra fee to be in the ad. It's part of the benefit of being a seal holder.
Correct.
Along with being on our website also as a seal holder.
Thank you, Luana. We do also have a question regarding whether the program is only for nonprofits in New York. Our New York BBB does reviews for charities that are soliciting in the New York State area. We do also have a Buffalo location if you're located upstate that would do your review. And if you are a nationally soliciting charity, you would be reviewed by our Wise Giving Alliance, our national entity. If you have questions about the area you're in or who would do your review, please feel free to email us and we'd be happy to provide that information to you.
Sure. Just to clarify a little further, the BBB standards for charity accountability are the same throughout the entire BBB system. And the implementation guide to the standards is how we ourselves are bound to apply the standards. So the standards and the reporting system is uniform across all BBBs. If yours is an organization outside of our territory and you want to seek a BBB charity report, all you have to do is contact Heather or me, and we can put you in touch with the correct BBB reporting entity for that. Any other questions, Heather?
We have one final question. There is somebody asking, what if you notify somebody of your promotions on the phone? For example, would you like to donate $1 from each ticket purchase to our charity? So I suppose this is a question regarding guidelines for disclosure, for phone disclosures.
Well, that's a really interesting question. I'm not quite sure how to answer it since I'm not sure what the solicitation is like. But no matter what the format is for delivering a solicitation, we look for it to be accurate and as complete as possible, given the format. If you want to pursue specifics with us, we invite you to contact us. You could, for example, share the script of your phone solicitation, and we could look at it with you and give you some feedback.
Actually, she
Any other questions?
She did give a specific a little farther down here. It says, if a member of the public calls the box office to order a concert ticket, is it enough if they ask them to verbally, I think it just got cut off, I think she probably means to verbally make a donation in addition to the ticket sales. And again, as Luana said, I believe if it's full disclosure and that donation on top of the sales is in fact going to your programs or to the organization in general, as long as it's clear about that donation, it should be okay. But if you want to email me individually, I could look into the issue some more.
Sure.
And I believe
we're always happy. I just want to make sure everyone knows. Please, by all means, contact us at any point if you want more information about the BBB standards and how we might apply them. Anything else, Heather? What have we got?
No, we're good on questions for now. Yep.
All right. Well, thank you all so much for joining us here today. We will follow up with you after this webinar. We'll send you a copy of the slides, and along with it, links to information about our upcoming programs and a couple of sample documents that relate to the standards that we've presented today. And if you have any questions at all, please feel free to contact us. Thank you, and that's it. Okay.
Thank you.
Bye-bye now. How did it go?
It sounded great on the other end. Hold on one second. Were there any questions you didn't answer?
No.
Okay, so you answered all the questions, so we don't need copies of them?
I don't think so.
Okay, then you can go ahead and click End Webinar for All. Right in the middle of your screen. Recording is